Commercial can be intimidating. Commercial real estate, right? Because you're dealing with very big numbers. It's a different language. It really is. And you're dealing with more sophisticated sellers. You're dealing with more sophisticated buyers. And I think most people feel like they have to have a ton of money to bring to the deal. They have to have really good credit because they need to be working with the banks and leveraging the banks to get loans to buy. They need to have a bunch of assets, but none of that's true. Like there are so many creative ways to work within the commercial real estate space. First of all, the majority of the deals that we do are creative financing. They're seller financing. And I know I've said this before and I'm going to keep harping this, but seller financing is so much more common and easier in commercial real estate than residential. Now we're structuring debt to buy the property that's not based on credit. There's no credit check. I'm not having to personally guarantee the loan. In most cases, I'm getting an interest rate that is significantly better than the banks. You know, the banks might be 8.5%, and we're negotiating 4.5%, maybe 5% interest. Seller carries less amount down and significantly higher return. Residential wholesalers can make decent money, but to make really good money, you have to scale. And what I mean by that is, okay, now they have to hire a team. They need multiple people calling on the phone, acquisition managers, disposition managers, transaction coordinators. And so their marketing costs, whether you're doing PPC or SEO or whatever your ad spend is to drive this traffic and find the deals. So you have a very large overhead. Now I want to just shift and give you a comparison. Can you do that in commercial, build a big team? Absolutely. But do you have to build a big team to make good money? No. You don't. When I started, I was a one-man show. I would find the deal, negotiate the deal, find an end buyer, and sell the contract to the end buyer. It was just me. So if I made $400,000 on a deal, guess where that $400,000 went? To me, right? I didn't have a bunch of overhead. I wasn't paying a team. I'm working with a gentleman right now. In fact, I'll have to share his most recent deal. He just had a deal fund for him today, $108,000 into his checking account today on one deal. It's an RV park. Now, what's so cool about his story is he's a retired police officer, knew nothing about real estate. Not that he's lucky, he put in the work, right? He's a hard worker, he put in the work. He's been doing this for less than a year. And in 1 year, this year, he's already on track to make over $300,000. That'll be on just a few deals. He'll make over $300,000 this year. That's more than he ever made in an entire year as a police officer. It's more than most people in this country make in an entire year. He doesn't have a team. He doesn't have acquisitions managers and dispo managers. He's not spending a bunch of money to pull data and skip trace data. He has almost virtually no overhead. So compared to residential, let's say you have a goal to make $1 million. All right, well, let's back into that. If your average net profit is $10,000 per deal, that means you need to do 100 deals in 1 year to get to $1 million. So what's that? That's almost 10 a month. There's no way you're gonna get to 100 deals without a team. Multiple people working for you, so now you have to manage people. What that means is when you make that $1 million, that's not all going to you. You're covering marketing and overhead and costs and commissions, etc. So how much actually trickles down to you, plus the time and energy and headache that goes in to managing that team? Well, maybe your RIP average is higher. Maybe you're making 20 grand on average per deal. Awesome. You still got to do 50. That's 4 or 5 deals a month. You have to be knocking out consistently every single month to get to that number. In commercial real estate, I don't want to look at a deal unless it's got at least $100,000 on it. What is the highest and best use of my time? A $10,000 deal can take just as much time and energy, if not more time and energy, than a $100,000 deal. So I want to work on a $100,000 deal. Well, a $100,000 deal, that means I need to get 10 done in a year. That's less than 1 a month. But it's not uncommon to make it $250,000. So if I'm ripping $250,000 per deal, are you kidding me? That's 4 deals in a year. That's 1 deal every few months, and I'm gonna hit my $1 million number, and I don't have that big overhead. And every once in a while you hit the home run, and you could do it on 1 deal. That absolutely, that does happen. So what I think is counterintuitive to really scale and grow in this business isn't necessarily to grow what you're currently doing and do more of it, because with that comes a lot more overhead and headache. It's not to do more deals, it's actually to do less deals. And then every once in a while you get a really big deal, right? It could be 7 figures. Focus on the base hits, but the cool thing is that a base hit in commercial real estate is a home run in residential. And there's nothing wrong with scaling in residential and having the team and having all that overhead and expense, because like you can build a very, very successful business. You can actually accomplish the same thing in commercial, not by doing more deals, it's doing better deals, doing the right deals, doing bigger deals. Because If I were to ask the average person or anybody in real estate, why are you investing in real estate, or why are you looking to learn how to invest in real estate? I can tell you that most common answer, the number one answer I would get, is to make money. I want to make more money. Okay, great, but that's really not true, right? It's the byproduct of the money. For me, and I think for a lot of people, it's about control of time, freedom of time, being able to do what I want to do, when I want to do it, with who I want to do it with, right? The money provides that. And then the real estate's the vehicle to do that. Well, in commercial, you can hit some really big numbers just doing 4 or 5 deals a year. Commercial deals do typically take longer than residential deals to get done, start to finish. So you need to anticipate that. So the residential is, it's a quick turn and burn. I find a deal, I get it to contract, and I'm going to try and flip that paper in 7 to 14 days. Definitely under 30 days. In commercial, it's going to take probably 90 days. Sometimes can be less if it's a screaming deal, and definitely can be longer, especially if we're looking at usage changes and things of that nature. But let's say it's 90 days. But it's all about follow-up. The money's in the follow-up, staying in front of these people, and then eventually you build a pipeline. So it's like anything else. The first part is the most difficult because you don't get that immediate gratification. You don't get that immediate success. It's like, when a rocket takes off, or an airplane takes off, it uses 90% of its fuel just to get in the air. Once it's in the air, it can complete the rest of the trip on 10% of the fuel. It's really the same thing here. If you're consistent and you're persistent with it, it may take you 3, 4, 5, 6 months to get a contract and get a deal. But as you're persistent, now you're building a pipeline and they're going to start to land.
How long did it take you to make a process for this?
The process definitely wasn't immediate. I'd been in real estate for over 20 years, residential primarily. When I made the shift to commercial, it definitely wasn't to wholesale. That wasn't really on my radar. It was to buy and hold and reposition for long-term cash flow. And then when I ended up wholesaling my first commercial property, it just then made a lot of sense to give it more energy because quick return, high profit, super low risk. And then it just came with reps. Just the more I did it, like anything else, the better you get at it, you start to refine it, you find ways to get better. And now I have a system in place, which is really cool because when I work with somebody, I can save them months, if not years, of kind of a learning curve and skinning your knees and accelerate the process.
How would they get in touch with you to learn your process?
Right now, the easiest way to get in touch with me is just DM me on Instagram. I'm always happy to answer questions, that people may have. What I don't do, I want to clarify this, is I don't just underwrite deals for people, right? I have a business, I have a family, and I'll just, anybody listening on this, if you just send me an address of a property and ask me if I think it's a good deal, I probably won't even respond, okay? And that's not to be a dick. It's just like, I value my time. I know what my time is worth, but if somebody has a deal, they understand how to underwrite it, they have a contract on it, and they DM me, I'll take a look at it, or I'll have somebody on my team take a look at it, and we'll JV all day long because we have a bunch of buyers. And so we can leverage our buyers if somebody has a deal. If somebody's really interested in learning how to do this or working with me directly and working with my team, this isn't just like open the gates and we work with anybody. Just like I would think the person on the other end is going to be very selective and do their due diligence on me to see if I'm who they want to work with. We do the same thing. Everybody likes the idea of making money in real estate, but not everybody is willing to do what it takes. And so we want to make sure we're identifying the right people. But what we do is if somebody shoots me a DM and they want to explore it a little bit further, we do a strategy call. And it is legit a strategy call. There is no sells. We're not trying to sell you anything. Let's break the strategy down in detail so you understand it, because there are nuances to it. So then you can decide if it's even something you want to explore further. If at that time we're bringing in new people to the small group we have, then you could set up an interview and we could discuss that in more detail. Yeah, market research, it's a critical part to this business. If you're keeping it yourself, right, we want to identify risk as best as possible so we can mitigate that risk. And if we're wholesaling the property, we want to look at it through the end buyer's lens, right? And that's what they're going to be looking for. So there's a lot of really good resources out there. Some are paid, like CoStar and Reonomy. Some are free. You can get some great information off of websites like LoopNet and Crexy. Bestplaces.net is a great resource. It's free. It'll give you what the population growth or decline is, what the average median income is, median home price, what's the MSA that it's in and the size of that MSA. So that's one that we use all the time. There's a bunch of great websites and free resources too, like freemaptools.com, census.gov, bestplaces.net, sparefoot.com, Rent-A-Meter. Use AI too, ChatGPT or whatever AI tool that you're using. You can ask questions there. So if you want to know what market cap is in a certain area, what other properties are selling for or trading for on a per door basis or a per key basis. And guys, use the internet in general. If you hear somebody say a term and you don't know what it is, Google it. When I started in this business and I'd get off the phone, like I'd be on the phone like with some super high level people, like working on multi-million dollar deals. I'm talking like 40 million, 100 million, 200 million dollar deals. I would get on the phone and feel like, okay, I'm out of my league, but this is an opportunity to learn. And I'd just shut the up and I'd listen, and I'd have a notepad. When they'd say something I didn't know what it was, I'd write it down. And then when I get off the phone, I Google it, and I'd educate myself. That's the crazy thing about the world we live in. Because when I grew up, like, it was literally the Encyclopedia Britannica. That's what we had. And so our access to information was limited to that. If a question came up, and this would happen all the time, and we wouldn't know the answer, you just let it go. You don't do that in today's world. If you have a question, I'm like, well, let's find out, right? We have so much information at our fingertips. When somebody makes an excuse that they don't know how to do something, that's an excuse. Also, the ability to actually learn. Here's from people that are doing it. Where's the best place to get started? God, I can't tell you how many times I get that question, and the way I answer that question now is a lot different than I used to answer it in the past, because just being real, a lot of people like to ask questions. They just want like some magic bullet answer. Like, hey, if you do this thing, you're gonna magically make $1 million, and that doesn't exist. So when somebody says, what's the best way to get started? Taking action. That's the best way to get started. So here's a couple things you should do. Pick up the phone, start calling some real estate brokers and ask them about their property. Mess up, make some mistakes, don't know what to say, because then you're gonna come back and you'll have good questions to ask me or somebody else, and we'll tell you how to answer them. Or pull a list, go to Adam Data, it's free. You just gotta pay for the file. Pull a list on multifamily, on apartments, or pull a list on self-storage. Skip trace it. If you don't know how to skip trace it, watch a fucking video. Go to Batch Skip Tracing. They'll help you. Just call them. They'll walk you through it, because now you're gonna have questions. The best way to learn is by taking action. What a lot of people wanna do is ask a question, what's the best way to get started? And I can answer that, and then it just comes with another question, another question, another question, and they never take action. So let's be real, it doesn't matter, does it? Take action, then let's talk. Yeah, what constitutes a bad deal? What makes a good deal or a bad deal is really in the eye of the beholder and the eye of the buyer, because what's a good deal for one type of buyer is actually a bad deal for another type of buyer. So I'll give you like an example. For most of the investors I work with, they're looking for value add properties, something that has vacancies and submarket rents, etc., so they can increase the income and increase the value. So if there was let's say a Class A property that was fully occupied, rents were at market, and it was selling at a 4.5 cap, well, that's not a deal for them. There's no room there to increase the value. That's a bad deal, but it's a good deal for somebody. It's a good deal for a hedge fund that's managing $40 billion, and they need to place that money, some of that money, into a very, very safe investment so they can get their investors a return. Sometimes what appears to be a bad deal is actually a really good deal, and vice versa. So we looked at a deal that on the surface didn't look like a deal because it was a 3.5 cap. But the expense ratio told a different story, because the expenses were about twice of what they should have been. So we dug into the expenses. There was a $90,000 payroll expense. This is on a self-storage facility. Well, who was the $90,000 going to? Well, it was a mom and pop owner, and that's what they were paying themselves. So me as an end buyer, or if I wholesale to the end buyer, they're not gonna have that expense. We take that out, it bumps it from a 3.5 cap to a 7 cap, and that's on the ask. So now we can come in more aggressive and get it closer to a 10 cap. So sometimes a bad deal, again, what appears to be a bad deal is actually a good one, and it works the other way too. Understanding how to speak the language is critical for multiple reasons, but especially if you're new, because a seller or a broker is not going to want to work with somebody that they feel they don't know what they're doing, because they don't have confidence in your capacity to perform and to close. And so we've all heard fake it till you make it. Okay, learn some basic terminology. You don't have to know everything. Nobody knows everything, but know enough to be able to talk the talk. And if you can talk the talk, eventually you're going to be walking the walk. Debt and equity instead of down payment and mortgage. Debt is the mortgage. Instead of a mortgage payment, it's debt service. Equity is the cash that you're putting into the deal or the down payment. Price per door is multifamily or apartment complexes. What's the price that we're paying per door? Cap rate is the capitalization rate on the property. NOI, net operating income. GOI, gross operating income. P&L is a profit and loss statement. T12 is the trailing 12 months of income. EGI is effective gross income. OPEX is operating expenses. CAPEX is capital expenditures. And look, there's a lot more: physical occupancy, economic occupancy, PIPs, liquidated damages, defeasements. But that's why I say we're always learning. We should always be learning, but learn the basics. You're going to give people confidence when you're speaking with them, and you need to be confident. You need to always position yourself at or preferably above the person on the other end of the phone so they want to do business with you. Yeah, where do you get the information or how do you start to learn it? Well, first of all, I put together a glossary of terms. If anybody wants that, I'll give it to you. Just shoot me a DM and I'll send you the link, and so you can start there. Outside of that, the best way to learn is by taking action. Just jump in and start having conversations with sellers, with brokers, with other people in the space, other investors. Go to meetups. Put yourself out there. Can't learn how to swim by watching videos of people swim. Eventually, we got to jump in the pool. And so much of what I see a lot of people do is they waste so much time and so much energy. You know, reading books and watching YouTube videos doesn't equate to deals, and it doesn't equate to money in your bank account. So get off the sidelines and get in the game.